Ladies and gentlemen, good day and welcome to the RITES Limited Q4 FY22 and FY22 earnings conference call hosted by Elara Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities India Private Limited. Thank you and over to you, sir.
Thank you, Vivian. A very good morning to everyone. On behalf of Elara Securities, we welcome you all to Q4 FY22 earnings conference call of RITES Limited. I take this opportunity to welcome the management of RITES Limited, represented by Shri Rahul Mittal, Chairman and Managing Director, Shri Suresh Varadarajan, Director Projects, Shri Anil Vij, Director Technical, and Shri B.P. Nayak, Director. Begin the call with a brief overview by the management, which the Q&A session will start. I'll now hand over the call to Rahul sir for his opening remark. Over to you, sir.
Yeah, morning everybody. Bright morning and very interesting and very exciting results for us. So let me begin with the safe harbor statement. The presentation which we have uploaded on our website yesterday and all discussions during the call today may have some forward-looking statements. These statements are considering the environment we see as of today and obviously carry a risk in terms of uncertainty because of which the actual results could be different. And we do not undertake to update those statements periodically. Having gone through that, let me give you a brief overview of the key features of our results, which you must have seen. We had committed and we had aimed for coming back to our pre-COVID levels of 1920, and we are quite pleased that we have been able to reach an operating revenue, an all-time high of 2575 crores, which is a 40% growth since last year and about 7% growth since the pre-COVID levels, both in terms of the top line and the bottom line, the core EBITDA. Another interesting thing is that we have reached an all-time high of exports, both in goods and services. The export of rolling stock is in the range of about 960 odd crores, an all-time record. Our international consultancy is about 110 crores, which is again an all-time high. So we are. This is a very encouraging sign for us. Another very interesting thing is that we have been getting a lot of orders across the spectrum of our core areas of operation, whether it is the metros, whether it is the highways, whether it is the railway infra, both in domestic as well as in the international sector. Recently got an order from Ghana for about 100 odd crores for the railway system, in Guyana for the highway system of about 25 crores, in the metro system for Bahrain for about 1.5 crores, in Bangalore metro for about 20 crores. So the company is growing and is consolidating on its basic mantra of multi-sectoral consultancy. So with those opening comments, I would leave the floor open for questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a questions. Participants are requested to restrict your questions to 1 per participant. You may get back in the question queue for follow-up questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shreyansh Mehta from Equirus Securities. Kindly proceed.
Yeah, thanks for the opportunity. So congratulations on a great set of numbers. So if you could help me out with the breakup of the current order book.
Yes. So we have an order book of about 5,000 crores. 2,200 crores are on turnkey projects. About 2,000 crores are on consultancy, which includes the inspection. We have about balance of about 450 crores for the export, the two orders which are currently going on, Sri Lanka and Mozambique, and we have a leasing order of about 128.
128.
Yes.
Sure. So, sir, my second question pertains to our outlook for FY23. Given that, now we just have 450 odd crores of order book, how do you foresee FY23 panning out?
So, in terms of the top line, while we will definitely aim for consolidating on the operating revenue which we got for 21-22, yes, but there is a challenge in terms of the current order of exports, which around 350 or 400 crores will finish by Q2. So we will make it up with the turnkey revenue. We are pursuing for fresh export orders, but by the time they mature and the revenue starts coming in, it may be by the end of the year. So the aim is to reach, definitely improve on the top line which we got for the last year. However, because of the mix being changed from the export vis-a-vis more of the top line coming from turnkey, it will have definitely a little impact on the margins, because turnkey, as you know, are lesser margins compared to export.
Correct. So, sir, if you could throw some highlight, how much will turnkey contribute in terms of the revenues in FY23? Because still we are not seeing much in terms of execution out here. It's in the range of 2,000 odd crores.
So the revenue for turnkey for 21-22 was about 450 crores, and as I said, the 2,200 crores balance of turnkey, I foresee a large chunk of at least about 900 to 1,000 crores minimum coming from this as we move forward. Let's see how each quarter goes, but the point is that 2,575 we will definitely try to better, and we will try to make up from the turnkey side for the top line for the gap in the export for few quarters.
Got it. So because, if I do a simple math, that roughly 450 coming from exports, 1,000 odd crores from turnkey. So we are roughly at 1,500. And then roughly around, say, in terms of contribution from consultancy, it is in the range of, say, around 1,000 or...
I think you can do your analysis yourself. I've answered your question. I think you can move on to the next question.
Thank you very much. The next question is from the line of Arafat Saeed from Reliance Securities. Kindly proceed.
Hi, sir. Thanks for taking my question. So, first question is on your export order of Sri Lanka. I just want to get a bit on that. What's happening over there? You receive your money on time, or any update on that?
Yes, so Sri Lanka, we've completed recently the last consignment also, and we are in touch with the authorities there. I don't foresee any problem in getting our revenue. It may be delayed by a few months here and there, but in this financial year, I think we should be able to get all our revenue.
Any receivable pending from them?
Yes, there obviously the last consignment which has gone recently, that we will get over a period of time, but we will definitely get it.
Fine, sir. I will back again in the queue. Thank you.
Thank you. The next question is from the line of Sanjay Doshi from Nippon India Mutual Fund. Kindly proceed.
Yeah, good morning, sir, and the team at RITES, and congratulations on a good FY22, where we overachieved our targets of pre-COVID levels. Sir, I just wanted your thoughts on how one should look at this company from a medium-term perspective and not focus a lot on a quarter or a year, because the kind of opportunity one can see on consultancy, especially overseas and well as exports. So if you look at from a 4-5 year perspective also, do you think the company should be able to target double-digit growth with a stable margin profile?
So I'm glad, very interesting question, and you've got it right, because we've got such a mix of revenue streams and each having a wide range in the margin, that to focus on a particular quarter doesn't really give the full picture. So if you see on an annual basis or a 2-year or a 3-year or a 5-year perspective, yes, we now with the consultancy revenue also coming back to pre-COVID levels around about 700 crore. And international consultancy, we've touched the all-time high of about 110 crore this year. So I think, and we're getting a lot of leads. We bid for a number of international consultancy projects. I see we consolidating our place in the consultancy ecosphere, both in the domestic and the international fields, across the key sectors of metro, highway, railways, and of course, we're getting a lot of now opportunities in the green, the ESG sector. We've got a lot of expertise in that. We have been doing a lot of work. We started a new sustainability vertical a few months back to focus and collate all our resources to target this particular area. And this is again going to be another area which is going to add in a big way in our consultancy top and bottom line, both domestic and international.
So with your permission, just a follow-up on the comment that you made. While our overseas consultancy is only 100 crores, while domestic is around 700 and growing, where do you see overseas consultancy maturing for a company like RITES, given that you've just started international, and this is the best margin profile business for us? So that's why I'm asking that. Thank you.
I'm glad you asked that, because this is going to be a very key focus area. We've started foraying into international consultancy in an aggressive way. In the past few months, we've already started seeing results. As I said, a few orders have come in the last few months itself, whether it is Bahrain, whether it's Guyana, Ghana, Nigeria. So while each of these, some of these projects are low value because some consultancy about 100 crores, some are few 2-5 crores. But I foresee this jump from about 60-70 crores in the previous year to 110 crores in 1 year. Going forward, we're going to see a big jump in this. But give it some time, because these orders take time to mature. We're aggressively bidding everywhere in a number of countries. But I see it coming in a big way. So I wouldn't like to speculate on any number, but you can see the jump itself in the last 1 year, and considering that trend, you can take it forward.
Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Chintan Sheth from Samiksha Capital. Kindly proceed.
Thank you for the opportunity and congrats on a good set of numbers.
Mr. Sheth, your audio is a little bit low. Can you come closer to the microphone?
Hello. Yeah. Is this audible?
Yeah. This is better.
Yeah. Thanks for the opportunity, sir. On consultancy coming back pretty strong. That's good news for us, and I congratulate the management for that. But how do we see this trend continuing for coming years? Because as you mentioned in the opening remarks, margin will likely to get impacted because of skewing towards turnkey away from exports in FY23. Will we try to bridge it up with increasing our contribution from consultancy to kind of offset some of the margin impact in the coming years? What kind of growth we should build in for consultancy?
So let me first put it in perspective. This temporary dip, the mix between turnkey and the contribution from Expotech is only primarily for few quarters in this FY.
Correct. I understand. Yeah.
It's not for the coming years. It's just a stopgap for the time the revenue from Expotech starts maturing by latter part of this FY or early next FY. However, we are very conscious, as I've been mentioning in my previous interactions, that we are primarily a consultancy organization, and for us, whether it's the core EBITDA margin or the bottom line margin, these are sacrosanct, and we will be very particular about those, and we will try and maintain them. So whatever are the offset impact because of the turnkey on the margin, we will definitely make it up from the consultancy margin. However, consultancy business domestically has become very more competitive, so there are pressure on margin, and that's why international consultancy, which gives us even a better margin, is going to be a very major focus area. So a mix of all this will help me ensure that we keep our bottom line and our core EBITDA margin safe.
What kind of growth we can expect, sir? The traditional 10-12% growth which we were doing earlier pre-COVID, that one can expect at least?
Yes, as I said, definitely the top line 2575, we will definitely aim to better it. The bottom line will definitely all targets, whether it is the top line, bottom line, the core EBITDA margin and the PAT margin. Our targets, it's early days, only been 1.5 months, but
right.
Definitely this FY we are aiming to better our 21-22 performance.
Sure, I'll join back in. Thank you for the response. Thank you.
Thank you.
Yeah.
As a reminder for the participants, to ask a question, kindly press star 1. The next question is from the line of Dixit Doshi from Whitestone Finance. Kindly proceed.
Yeah, thanks for the opportunity. Couple of questions. Firstly, you mentioned that the latest what we have executed for Sri Lanka, the payments are pending. So how much would be the absolute amount?
So the last set of coaches has gone in quarter 4, and the roughly about 100 crores is balance from Sri Lanka, which will come. I mean, I don't foresee any problem because there's a process of commissioning those coaches as part of the contractual agreement. So by the time these coaches get offloaded and commissioned, there seems to be no headway, there seems to be no roadblock in the getting these payments. We've done enough headway at the appropriate levels, and we've got assurances that these payments will come because these are physically delivered there, and that's why there seems to be no problem. Problem would have been if their delivery would have got stuck up. But now since they have all reached, all the orders are completed, so payment is not going to get held up.
Yeah, but how much is the receivable?
I said about 100 odd crores.
Okay, only 100 crore.
Yeah, that's it. So that's the last lot which has recently gone.
Okay. And now my second question is regarding the export orders. So we are trying with the different countries. So whenever we will get the order, how much time it will take, to start execution, because it has a lead time?
Yes, so that's very correct, your assessment. So rolling stock are 4 types. We are exporting all kinds of 4 types of rolling stock, whether it is locomotives or coaches or DMU coaches or wagons. Now all have a different lead time. Locomotives would have the longest, the normal coaches and the wagons would have the shortest. The DMU coaches, since they have a parred arrangement, they have a midway lead time. So anything varying from 3 to 6 months to about 9 months or maximum a year, because certain locomotives, if they are for a Cape gauge country like Mozambique, they require a little more developmental time because the vendors are lesser. So as I said, varying from the kind of product, but we are hopeful that we should be able to start realizing some revenue from new orders by maybe Q4 or early Q1.
Okay, so you are expecting some orders in next couple of quarters in export?
Definitely.
Okay, and just roughly, are they large orders or the kind of Sri Lanka we had, or they might be small orders?
I would like to speculate right now. As soon as we could be following number of leads, as soon as any of them matures, we'll be informing the exchange.
Oh, okay, fine. That's it from my side. Thanks.
Thank you. The next question is from the line of Gaurav Jagedar, an individual investor. Can we proceed?
Thank you for taking up my question, sir. So just I would like to have your view on our international export orders. How do you see going forward? How much growth can we expect from this segment? Thank you.
Our forays in the last few months after the world travel and economy started opening up again has shown a lot of encouraging signs across continents. The interesting thing is we are getting leads not only from the erstwhile customers of African continents and Southeast Asian countries. We are getting a lot of leads from Latin American countries and Central Asian, Central Europe countries also. And we are targeting export of not only railway rolling stock, we are also targeting export of, we've tied up for metros. So we are getting some interesting leads about metro rolling stock. We are also getting, exploring the various avenues to try and pilot the export of our Vande Bharat, because a lot of countries have shown interest in that. So across the sector, we are getting interesting leads of export, and I see a growth. As I said, to speculate on any number unless it fructifies into an order would not be correct. But by latter part of this financial year, you would certainly see some orders coming up.
Great. And just to follow up on this, sir, since you mentioned the ESG segment in the overseas market, what's your view on it? Like, how do you see it panning out?
So I think the second question, you can come back in a queue to be fair to other participants, because it's not a related question.
Thank you.
Thank you.
No worries. Thank you.
Participants, to ask a question, kindly press star 1. The next question is from the line of Chintan Sheth from Samiksha Capital. Kindly proceed.
Thanks for the follow-up. I hope I am audible again. So on some bookkeeping questions on other expenses, the other OPEX, if I look at, has kind of increased, bumped up for past couple of quarters, 55 crores in Q3 and 47 crores this quarter. Anything, any one-off or higher provisioning which we did in this? If you can throw some light on that.
So few of the expenses have grown up because one is certain employee expenses went up because the DA was opened up. There was we made much higher profits, and so our bonus was higher. A lot of leave encashment because of normal year coming up, or restrictions are opened up. So FY22, 21-22, the employee expenses have gone up, and then in terms of other expenses, certain provision we made for a damaged locomotive, which was about 13 crores. Then there were also expenses in terms of some depreciation expenses. Certain those have gone up because of the certain locomotives which we have on lease. They have reached their age of the rehab. So these are certain broad, big chunk expenses which have gone up in our expenses.
13 crore provision came this quarter or put together in last quarter?
I'm talking of the overall.
Overall for the year.
Yes.
Okay. Yeah, I'll join back in. Thank you.
Thank you. Participants, if you wish to ask a question, kindly press star 1. For questions, kindly press star 1. We have the next question from the line of Shikha Doshi from Axis Securities. Kindly proceed.
Hello.
Yes, Shikha, go ahead.
Yeah. Thank you for the opportunity. My question is, could you give a guidance for your capex target for the coming quarter or FY23-24?
So capex, we have done about 140 crores in 21-22, and we would remain in that range. We are targeting somewhere about 150 to 200, not more than that. Primarily, we are, as I keep reiterating, we are not a very capex heavy organization. Our focus is on limiting capex to only key areas, and that also this is slightly higher this year because we are planning to set up some major labs for centralized inspection, some equipment for new age inspections and lab analysis. We are also planning to invest some in our IT upgradation. So in terms of capex, it is roughly going to be in the range of about 150 to 200 crores.
Okay, got it. Thank you.
Thank you. The next question is from the line of Anurag Patil from Roha AMC. Kindly proceed.
Thank you for the opportunity. Sir, if you can elaborate on the capex of solar side and the leasing segment, that would be helpful.
So we are not planning any capex on the solar area. I've been clarifying that for the past few quarters. And the second part, what did you say? Capex on?
Leasing.
Yeah, so leasing we already have about 65 locomotives. I don't foresee any major capex investment in the leasing areas. We've got a good fleet, and we're going to handle the existing business as well as the growth with rationalization of use of these locomotives.
Okay, sir. Thank you.
Thank you. Participants with questions kindly press star 1. The next question is from the line of Parimal Mithani from Prudential Investments. Kindly proceed.
Hello, can you hear me?
Yeah, go ahead.
Yes, sir. Thanks for the opportunity and congratulations for a wonderful set of numbers and for a good dividend as well. So I just wanted to know, in terms of consultancy business, how do you see forward going from here? And and in terms of the national rail plan which you talked about, what is the opportunity size for us if you can just elaborate that?
Opportunity in, sorry, last question?
It's a national rail plan.
The national rail plan.
Yeah.
So in the first point in terms of consultancy, as I mentioned earlier, the consultancy both in domestic area, once having reached the pre-COVID levels, I see a growth going into number of areas. Especially in metro, we are getting a lot of good orders, both domestic and international. So getting a lot of good orders in consultancy in the highway area. Airports, we are getting a lot of orders, and we are aggressively now growing and pitching for growth in consultancy in the sustainability area. So whether it is the smart city planning or city plans, mobility plans, we are in the sustainability vertical that we've started. We have got, as a MSI, as a master system integrator, where we are merging the mobility plan, the sustainability, as well as the IT. All of them we are merging together and giving a solution to clients. And that has been taken very positively. So I see a lot of growth for us in that area with our expertise. As also, as I mentioned earlier, lot of growth aggressively being targeted for international consultancy, which has already seen a number of orders coming in the last few months.
Yeah. And so national rail plan, if you can just...
Yeah, so in the national rail plan, there are a number of areas which are planned, whether it is port connectivity, steel plants connectivity, coal connectivity. All these areas are being targeted by us. We already have a number of both consultancy, PMC, DPR, as well as turnkey projects in coal connectivity areas, in steel plants, consultancy projects in ports, airports. So with the NRP having so much of allocation and being pushed, we are going to capitalize further on that, including things like the Jal Jeevan plan, and we also getting a lot of leads in the Jal Jeevan area also.
And so if I can just ask one more question. Hello?
Yeah, is it related? Then go ahead, otherwise you can come back.
Sorry, it's not related. It's a different thing in terms of
Please kindly come
payout.
back in the queue. Yeah,
okay.
kindly come back.
Thank you. The next question is from the line of Sanjay Doshi from Nippon India Mutual Fund.
Thank you for the follow-up, sir. Just wanted to get your thoughts on overseas consultancy business. How is our approach in capturing those markets? Are we qualifying on our own credentials, or are we partnering with global consultants for these? If you can just highlight that part.
So it's a mix and match depending on the client, depending on the country, and depending on the sector. We have got the few orders in the last few months, both as standalone as well as in partnership. To give you two recent examples, the Ghana order we got in partnership, which was about 100 crores for our portion. That was a railway consultancy project. The Guyana highway project was about 25 crores, which was our also in partnership. But in number of cases, we got it on our own, like Nigeria, the highway, the Bahrain metro, we've got it on our own also. So we follow an approach of depending, as I said, on the sector, the client, the requirement, the country. We are open to partnership. We have been partnering, as you must have seen in our declaration to the exchange with the best of the consultancy organizations, whether it is SMEC or a number of consultancy organizations across the sectors, and we will continue to partner with them.
Thank you very much.
Thank you. Participants, kindly restrict your questions to one per participant. The next question is from the line of Viraj Mithani from Jupiter Financial. Kindly proceed.
Yeah, good morning, sir. My question is on the green consultancy, and can you give some color on green consultancy and as well as on RMCM? That is what my question is.
So in terms of green consultancy, we have been traditionally doing a number of studies for consultancy projects for whether it is the SIAs, the EIAs, the solid waste management, the water management, and things like that. So those have been, as I mentioned, consolidated under one sustainability vertical, where rather than standalone consultancy, now they are, and we have been doing smart city planning, mobility plans. So now we are pitching it as one product, depending on the client's requirements. If I do a city plan for you, it is a green city plan. It incorporates all the elements of green also, rather than having a standalone consultancy. Similarly, in all our DPRs which we are doing, even for construction work, whether it is building construction works or it's a highway construction work, we are incorporating our green. So every DPR now, since we declared a policy of transforming to green as going to major thrust, all our DPRs are now green. All aspects of green are incorporated in them.
Okay. And what are the growth prospects in that would be, sir? Like some color on that.
The growth prospects are tremendous. You've seen the areas available, the opportunities available. The government also, the COP26 has been pushing in this area. So we will be targeting a disruptive growth in this area. You can see the figures as they come over the coming quarters.
And sir, color on RMCL, that
I think you can come back.
You can come back in the queue for further questions. Thank you. Participants, if you wish to ask a question, kindly press *1. The next question is from the line of Danesh Mistry from Investor First Advisors. Kindly proceed.
Hello, sir. Thank you and good morning to you. So I had the question related to our export sale. So one is that I remember earlier, sometime last year, we were exporting a few locos to Sri Lanka and things like that. So is that are those orders through with Sri Lanka, or is there any pending? And second is that if you just comment on the export sale margin. Last year, same quarter, we had done an EBIT of about 30 crores on a top line of 95. And this year we've done about a 36 crore EBIT on a 250 crore top line. So some sense on that, is there any difference in the type of ordering which we have got in the export sales? Thank you.
So in terms of the Sri Lanka orders, the last lot of coaches and DMU sets have gone. So as of now, all the orders are completed. And as I mentioned a little while earlier, the commissioning of these and the payment of about 100 odd crores will come in the next coming few months. As far as the comparison of margins which you did of last year vis-a-vis this year of particular export, you see export has normally margins in the range of about 25-30 odd%. So comparing one quarter with another quarter for particular export revenue vis-a-vis the contribution of that may not give a holistic picture, because the costs which get booked and the revenue which materializes for that particular product which has got exported may have a time lag of few months. So on an overall basis, if you compare the export margin from the year when there was, because like 21-22, there was, as I said, we did a highest ever export of 960 odd crores. 2021, there was hardly any export. So comparison would be better with 19-20 and the previous years. That is when you would be able to get an appreciable comparison of the export margins as it stands as of now vis-a-vis what it was earlier.
Got it, sir. Got it. And sir, if you don't mind me, what is our order book? I've just missed that.
The order book is 5,000 crores. Out of that, about 400 crores is balance on export.
On export. And in consultancy, sir?
Consultancy is about 2,000 crores.
Okay, sir. Thank you very much, sir. Thank you, sir.
Thank you. Participants with questions, kindly press star 1. The next question is from the line of Chintan Sheth from Samisha Capital. Kindly proceed.
Yes, sir. Sir, on the railway procurement, right now, recently we saw announcement of one of the entity getting 7,000 odd crore of wagon order, and previously also another entity got 5,000 crore orders. So this coach inspection business will definitely get benefited from it, or we are facing competition there as well?
So inspection business will definitely grow. Competition is there in every sector, whether it is in the inspection or whether it is consultancy. But with our credentials and experience of inspection, whether it is inspection of rolling stock or whether it is inspection of rail supply or a number of products that our QA wing does, with about more than 40 other experience, it's a well-established business of ours, and we are building up on that, on our experience, so that we are ready with the changing requirements. In fact, as I mentioned in my CapEx expenditure some time back, that we are also planning to upgrade our inspection labs also with the latest state-of-the-art equipment, so that, already few of our labs we've got NABL accredited, and whatever further equipment is required to have in-house detailed inspection facilities, we are spending some money on that to be able to do it in this FY.
So that will be positive, right? The traction is getting started from the railway procurement.
Definitely, it will leverage the opportunities of this growth in orders for railway rolling stock.
Sure. Okay. Thanks, and all the best, sir.
Thank you. The next question is from the line of Viraj Mithani from Jupiter Financial. Kindly proceed.
Sir, I wanted a color on our subsidiary RMCL in terms of growth numbers and the prospects going ahead.
Great. So RMCL has done fantastically well this time, the highest ever revenue of 93 crores, and it's up from 68 crores last year. It's got a profit of 45 crores, which is good bottom line margin of about 50%. RMCL is doing great work in terms of not only supplies of traction to the Indian Railways, power for traction, also the 26 megawatt wind power plant at Jaisalmer, that has shown its all-time high. In fact, the revenue for this particular plant increased an all-time high from 16 crores last year to 21 crores this year. Machine availability was an all-time high. So this plant is doing very well. RMCL is also majorly in part with the Ministry of Railways for its net zero plan. It's playing a very active role in the way forward for all renewable energy plans for the Indian Railways. So RMCL has got a very big growth trajectory. It's already shown its result in this year, and it's going to further grow in this FY in the coming years also.
Okay. Thank you.
Thank you. The next question is from the line of Anurag Patil from Roha AMC. Kindly proceed.
Thank you for the follow-up. Sir, lately you have been consolidating the operations in the IT segment also. So can you throw some light on what kind of revenue potential we can see in the next coming 2-3 years from this segment?
Yes, so this has been a new strategic thrust area. We partnered with TCS few months back, and we are exploring a number of opportunities. Primarily, they will be IT-based applications, which will be part of the product that I mentioned some time back, which I'm offering to my clients. If I'm offering a smart city product to my client, I'll be an MSI, a master systems integrator, which will have all IT-based application based on that. For example, if I'm right now doing a consultancy for the Tri-City of Chandigarh, the smart city, the mobility plan. We're doing a consultancy for the mobility plans for the Guwahati city. So all IT-based applications which can be supplementing my product which I offer to my client will be a part and parcel of my consultancy. So that will be itself a major contribution to my consultancy revenue. And with the partnership of TCS, we are exploring a number of opportunities, both in consolidated products as well as few independent IT application products also.
Okay, sir. Thank you very much.
Thank you. The next line of Parimal Mithani from Prudential Investments. Kindly proceed.
So I just like to get a number on the quality assurance business in the consultancy part for the current year.
Yeah. So in terms of the QA business, the revenue has been again reached the pre-COVID levels. It's about 325 crores, which is up from 129 crores. From 299 crores last year. So it's a steady growth in the QA business. The profit also has been 214 crores, which is up from 172 crores last year. So margins are safe. QA is working. The growth is good. However, as I mentioned, that QA we are also further aggressively giving inputs to diversify, to be able to be ready for the new age areas and to be able to take the competition in this area head on.
And so, last thing in terms of dividend policy, so have you maintained?
Kindly come back.
Mr. Mithani, kindly get back in the queue for further questions.
Okay.
Thank you. Participants who wish to ask a question, kindly press star 1. Kindly restrict your questions to 1 per participant. The next question is from the line of Rakesh Vyas from HDFC Mutual Fund. Kindly proceed.
Hi, sir. Good morning. So just wanted to understand this consultancy order book of close to 2,000 odd crore. What is the time frame in which this needs to be executed? If you can just throw some light.
So you see, consultancy business has different types of orders. Some are the initial DPRs, PFRs. Some are the PMC consultancy, which are in sync with the turnkey project. So if a turnkey project goes on an average from about 2.5 to 3 years also, something could go from 2 years to 4 years. So depending on the nature of the consultancy order, the revenue of consultancy comes sometime anything ranging from 6 to 10 months to something ranging from about 2 to 3 years. So that's the average. As I said, will depend on the type of the order of consultancy.
So just a follow-up on this, sir. Of this 2,000 odd crore, if it is possible to break up between long-term consultancy project and short-term, that will help.
I think that is because every project, every consultancy order is unique in its own way, so it's very difficult to compartmentalize it. But yes, we keep a tab very closely so as to, if there are some borderline consultancy orders which are midway between short term and long term, and we feel that they need to be pushed to expedite our revenue realization and also consultancy giving us better margins, we keep a tab on it and try to push it in every quarter.
Great, sir. Thank you so much. I have one more question, but I'll come back to you. Thank you.
Thank you. The next question is from the line of Arafat Saeed from Reliance Securities. Kindly proceed.
Yeah, hi sir. Thanks for taking my follow-up question. So my question is on what kind of opportunity you are looking in metro railway. If you can quantify that will be great.
Great. So metro, we are getting 2 very good types of leads and already maturing into orders, both domestic and international. So we have a strong legacy of working in metros. About more than 25 odd domestic metros we have done. 2,000 kilometers plus of metro work we have done in India already. Internationally, we are the engineering design consultant for the Mauritius Metro. The phase 2 of Mauritius Metro 2A just got commissioned a month back. You must have seen it in the media. The balance leg of the entire leg of the Mauritius Metro is targeted to be completed by this year. So in terms of metro, we have a very strong vertical, and we are also getting a lot of new orders in metro. Whether it is the PMC, we got an order for about 20 odd crores from the Bangalore Metro a few months back. We got a the metro consultancy work in Bahrain for a DPR work. So metro, I see a lot of growth both in terms of the initial feasibility, the DPR, the engineering consultancy, and now having tied up with BML, we are also pitching in a big way for entire one package solution, both in terms of design, rolling stock supply by BML, and O&M by us, because we have an O&M experience. We are running more than 20 odd mini railway systems in coalfield and steel plant. So with that, we are offering in a number of cases a entire a package deal. So metro is going to be a big growth area for us in the coming years.
Thank you. That would be great. Thank you.
Thank you. The next question is from the line of Rakesh Vyas from HDFC Mutual Fund. Kindly proceed.
Yeah, thank you so much for the follow-up, sir. One last question that I have was on the turnkey project business. Essentially, we have almost 2,200 crore of order book, and last year the revenue recognition has been fairly muted. Any challenges that you are seeing in ramping up this? I understand you have already highlighted that you expect this to improve significantly in FY23, but if you can throw some light as to if there are any bottlenecks out there which needs to get ironed out. And secondly, related to this as well is the impact of the high raw material inflation that we are seeing generally across the board. Is it going to have any material impact on our expected margins?
As far as the turnkey projects are concerned, the revenue was definitely muted, about 460 odd crores in FY21-22. These were projects which were at their initial stages, and now they are, with all restrictions also opening up, the turnkey projects are very much on track, and I mentioned, as you correctly said, that I see this to be a significant contribution to my top line. I don't foresee any major challenges or any roadblocks. Minor issues here and there are always there at project site, but there's no major roadblocks per se in taking these forward. And the second part, related question, I'm sorry I missed that.
The potential impact of the raw material inflation that we are seeing generally across the board, any impact that you might foresee on the margin?
I don't foresee much of an impact there, because all our orders have already built in that. So I don't see an appreciable impact on the raw material cost per se, on the inflation of the raw material cost in terms of the margins.
Great, sir. Thank you so much.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Viraj Mithani from Jupiter Financial. Kindly proceed.
So what will be our own cash in the company?
Sorry?
What will be our own cash in the company? Our own balance in the company. Our own cash balance.
Cash balance is about 900 crores. My Director of Finance, Mr. Naik, is there. He can give the details. Yeah, Mr. Naik.
Yes, this is it is around 950 crores.
And that is all our own, or is the client funds also in that?
So that does not include the client fund.
That does not include the client fund. Next, the question related to that is that the interest on the client fund is earned by us or given back to the client?
It is given back to the client.
Okay. Thank you.
Thank you. The next question is from the line of Harshit Kapadia from Elara Securities. Kindly proceed.
Thank you for the opportunity and congratulations for a good set of results for FY22. So my question is, first on the wagon manufacturing, recently a huge tender was being given by the Indian Railways. Had RITES participated in that tender, and is there a possibility that RITES could be looking where we already have a JV with SAIL to increase our production there? If you can comment on that.
Yes, so we have as you're aware correctly, we have a 50-50 JV with SAIL at Kulti. We have an assured offtake order, so we didn't bid for this, and our production has also started having an upswing. We have done more than 450 odd wagons this year. We are targeting definitely major growth in terms of the 22-23. We already have orders, and we are also trying to see what other products we can take besides railway wagon. Let's see how explore the opportunities for utilizing this facility even for other products. We've recently entered into vendor registration with Tata Steel for fabrication of their heavy engineering structures, which we are going to also plan to do at that facility.
Okay, sir. Thank you.
Thank you. Participants with questions, kindly press *1. The next question is from the line of Chintan Sheth from Samiksha Capital. Kindly proceed.
Sir, one bookkeeping question on customer advance as on March 22 on our books.
What is the question specific? I mean, we didn't get the question.
Balance sheet item, customer advances on our books as on March 22.
1 second, I'll ask my question.
The client fund with us available is 2,600 crores roughly.
No. In the liability side, sir, what is our client advances we have received? It will be similar to client fund or it will be different?
Yes, sir. It is similar to the client fund, around 2,600 crores.
Okay, sure. Sure, sir. Okay, no problem.
Thank you. The next question is from the line of Harshit Kapadia from Elara Securities. Kindly proceed.
Thank you. This follow-up question on the domestic consultancy. So we have seen, the order book on domestic consultancy has been coming down over last 1.5 years. Just want to understand, is it because of the competitive intensity which has increased in certain sectors of the operation in the consultancy? Is that the primary reason, or there are too many opportunities, hence we are not becoming aggressive the way competition is becoming to get more orders? So what would be your view on this?
No, I think your assessment in terms of the first point is very clear. See, we are very clear. We have seen a trend in the domestic consultancy area of a number of players pitching in with very, very low margins and low, costs and very low bids. So we are very clear. We give a certain quality of consultancy, and we made it very clear. We are not going to compromise on the quality and bid for some certain unworkable figures. So in terms of maybe you'll find a certain in total numbers of figure going down, but in terms of consultancy margins, we are very clear. We'll maintain a certain appreciable level. And I think with now the 2 quarters showing a lot of encouraging signs. In fact, in the last few months itself, the consultancy orders have again started picking up. So you can see this figure going up in the coming quarters. We have made a number of bids in very, very core consultancy areas which are our strength, but we will maintain a certain level of quality while aggressively bidding for these.
Fair enough. Just a follow-up on the international consultancy. So you had given us a sense. Now, are these projects which you are bidding for on the international side are funded by the Indian government, or is it like World Bank funded or ADB funded, so we are secure with payments as well?
No. In fact, this is the interesting, and that is the thing which we are pitching aggressively. We are pitching and bidding competitively for international consultancy across countries, across sectors, across funding mechanisms. So it could be funded by the local government there. It could be funded by an international multilateral funding bank. It could be funded under the line of credit. So we have a mixture of all these kinds of consultancy orders, and that is what keeps our revenue secure across the orders which we have in place. As I mentioned, in last few months, 3 or 4 immediate orders for consultancy we have got across countries, across sectors, and across funding mechanisms.
Fair enough, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I'll now hand the conference over to the management for closing comments.
Thank you very much. I thank all my investors and all stakeholders for the confidence that they have shown in our company. We are quite pleased and excited about the fact that we have been able to, in fact, improve our pre-COVID levels performance both in top and bottom lines by about 7 to 8%. And with all in the challenges, we are ready and we are committed to take this forward in the coming FY also. We are future ready, and our mantra has always been and will always be not just more of the same, but much more of the new. Thank you.
Thank you. On behalf of Elara Securities India Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you. Thank you, everyone.